On Thursday 28th of March 2013, the Omicron Forex Silver Trigger routine was set to run against gold in the form of the gold-US dollar pair. The parameters that were set included that trades should be both long and short, as decided on at the time by the algorithm, and should be terminated late every Friday so that they would not be held over the weekends. The 1 hour chart that monitored the progress of trading included one indicator in the form of the 200 period simple moving average SMA. This was for reference only and played no part in either the initiation or the management of any of the trades that were taken. The chart readout included the display of the equity curve, which began with a balance of €100,000. The algorithm set up the first trade to be a conditional long position. All trades were initially placed by the routine as conditional trades. Although the stop loss order for this cannot be seen on the chart as it is outside of the visible area, it is in place. No trade is ever placed without a stop loss order. The trade was never filled as the price did not reach the conditional entry point, and the trade was cancelled at 1700 GMT on the Friday, the second day of the run, so that it would not be open over the weekend in accordance with the parameter setting before the routine was started. The horizontal dotted line on the chart indicates a weekend. Trade number 2 on Tuesday, April 2nd was put in place as a conditional short trade. This was filled. It went to the first profit level, which had been set in the parameters as 2% of equity. It proceeded to go in the correct direction, with a brief and small reverse that did not go to the stop loss level. The stop then began tracking the dropping price in accordance with its initial parameter settings. Eventually, price turned upward, but the trade was closed before it hit the trailing stop, again in response to the parameter setting that said it should not remain open over the weekend, and this happened on Friday, April 5th. Early on Monday, April the 8th, trade number 3 was put in place again as a conditional short order. It too was filled, and again after a brief reversal took off in the right direction, with its trailing stop loss order in pursuit. The first profit level was reached on Friday, April 12th, and the full trade was closed out later that same day as on each of the previous occasions. Another weekend intervened, and then there followed a series of trades that opened and closed in relatively more rapid succession. While the distance between the entry and stop loss levels for these trades seems smaller, this is because the chart is automatically being rescaled, and the large falls of the previous 2 weeks have reduced the scale quite a bit. At the end of the period of 14 trading days, a profit of 6.5% was shown. There was one trade open at the end which had a negative balance of some hundreds of euro, but all the other trades were winners. Please press the next button on the right to move on.